Good afternoon, hello and welcome to this very, very beautiful looking set. This is the special Mahurat Day programming, an hour-long customary trading session which has sort of gone back the ages. This is the first time though that this is happening in the afternoon. I guess after a very, very long time. Usually this is, we start by saying good evening, but this is bang in the middle of the afternoon. First, let me just wish all of you, your families, a very, very happy Diwali from the entire team here at CNBC TV 18. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi. Afternoon.
Hi, folks. Happy Diwali to you, Prashant, to Nigel, and to all of our viewers out there. Wishing you a healthy, wealthy, prosperous Diwali and a fantastic new Samvat 2082 that starts today. Indeed. But look at how beautiful, our set is looking, right? It's bright daylight outside. But the diyas are sparkling right here in CNBC TV 18.
Well, that's right. Happy Diwali, guys, to both of you as well as your families and all our viewers out there as well. You know, it's got the makings of a very, very good next 1 year. So hopefully that's going to be the case as well, because the last 1 year hasn't been that great. But we're looking ahead. And I'll tell you what, one data point is with regard to Mahurat Trading days. I'm just looking at the rough data in the last 10 years. I think 70 to 80%, the Mahurat trading session actually is positive. So that's the data point maybe we can clutch onto. And I don't know how many times when three of us get together, we say, good afternoon and welcome to the show. But that's today.
Good afternoon. Closing bell is...
2:30.
Good afternoon, welcome for the first show of the morning.
For the
first show of the day.
That's true, first show of the day in the afternoon.
I was just wondering, Prashant, we had a mistake. No, it is afternoon.
No, it is afternoon, and this is, an hour-long session. So basically, the pre-open is kicked off now, the first rates, etc., will start to come up. And then the market open is at 145. Actual trades, all legit trades, by the way. This is not for the uninitiated, and a lot of new participants in the market over the last few years in the market. Some perhaps this is the first Mahurat session, but this is a 1 hour real trading session, where going back ages, people will come in, put in a token trade, a Mahurat trade. And of course, wish for the best as far as the next Samvat is concerned, which is Samvat 2082. So that is the relevance and the significance in this happy occasion of Mahurat trading, an hour-long session from 1:45 to 2:45. And of course, there'll be basically post-market hour activity from 2:45 to 3. So we are essentially going to be with you for the next 2 hours, 1:30 all the way to 3 p.m. So that's the lineup here. Top voices, top opinion is essentially what we will try and strive to get to you. Guys, let's spend 90 seconds looking at the overnight session as well, because this is a real session, right?
It is.
And US is trading. This is the bang in the middle of the week.
Yeah.
So we have the US markets, etc., to contend with. So just taking our viewers through it. US equities rallied rallied back towards all-time highs. S&P about 1% higher. And, the Wall Street economic advisor, Kevin Hassett, told CNBC, our network, that optimistic that government shutdown could end this week. Not that it has made too much of a difference to equity prices, which have done very, very well. President Trump was on the record talking about China. He said, well, and this is a quote, it's going to be a great trade deal. It's going to be fantastic for both countries. Then he kind of sort of went on about it's going to be great for the world. And of course, towards the end of the statement, there was a threat as well, that we got lots of leverage. If it does not work out, we will use all of that. So it's, nothing new in that sense, but I guess this is just news flow. Now, Apple went up 4%, optimism around the latest iPhone sales. There was some data point. NASDAQ was up about 1.5% as well. Gold prices continue to power higher. So basically, gold prices are back where they were last Friday. And, Friday's high was the new high back then into the weekend prices sold off. We took out those levels. 4,300 plus essentially is what we saw last night. Just a one-way street there as far as precious metals are concerned. As far as banks are concerned, deals galore. And I think on the last trading session, yesterday's session, that was, front and square really. RBL is the latest one. Before that, there was Samman, Yes Bank. Federal Bank is raising money this Friday. We had the Federal Bank management and we asked them about what they're planning to do. And of course, we are hearing chatter about more smaller private sector banks where they perhaps could be capital raised. So that's the setup, and I think that financial remains the key area which I think is important to take note of. Now, Nifty, the all-time high is the level to watch out for, 26,277. Supports, trailing supports, the 40 hourly has moved up to about 25,541. The Nifty Bank support, I mean, basically, Nifty Bank is into new uncharted territory. You got to look at extension levels. And for the Nifty Bank, there's about 700 points. The next resistance in that sense is about 700 points from the last close. Supports 20 hourly, 57,693, and the 40 hourly, which is 57,305. So that's a short synopsis of how things are set up as we start this hour-long Muhurat session. Surabhi.
Absolutely, Prashant. It's been fantastic to see the Nifty climb so many walls of worries,
Yeah.
right? And actually take aim and getting closer to that 26,000 level.
Yeah.
We're less than about a percent away from the all-time high, as you said. Just another important facet about U.S. equities, like you're mentioning, again, almost touching all-time highs.
Yeah.
So I was looking at some stats. Out of all the S&P 500 companies that have reported numbers so far, again, 75% have beaten estimates.
Yeah.
There are estimates suggesting that the Mag 7, the Magnificent 7, their compounded earnings growth rate is still going to be 15% in this quarter. So that story in the US has been rock steady and solid. And I guess we just need to see, if our earnings can pick up. And then therefore, what we've seen in October is the beginning of a long-lasting uptrend in the market.
Absolutely. Let me just quickly tease out, Surabhi and Nigel, what's coming up here, right? In terms of the voices and the faces you will see. As I said, this is the 1 hour where you'll get the best and brightest weighing in. So in a short bit, we'll be joined by BSE's Romesh Damani, who's going to be with us in terms of what he's making of Samvat 2082. Needs no introduction. And he's joining us, by the way, all the way from Europe. We have Atul Suri of Marathon. I mean, I think the last word as far as technicals are concerned, especially Nifty technicals. I mean, Atul, that conversation you don't want to miss. Envision Capital's Nilesh Shah, you'll hear from in just a bit. We'll have the MD and CEO of the National Stock Exchange, the platform which enables bulk of the trading in this country, Ashish Kumar Chauhan, will also be with us. And of course, we'll get you lots of Diwali picks. Deepan Mehta is going to be with us. He's a regular trusted face here on CNBC. Deven Choksi, a long-time friend, and of course, an advisor here. We have Dharmesh Kant, who will be with us, Mitesh Thakkar, who will be with us as well. Guess what? We won't sort of stop with equities. We'll get you views on, gold prices, silver prices. I mean, there's a bull market on in crypto as well. So, line up there. Kunal Shah, Samit Guha, and Sumit Gupta will be with us as well.
Okay, all right. So,
all right. So let's welcome the first voice here. We have Romesh Damani, who's joining us. He's member Bombay Stock Exchange. As I said, Mr. Damani is joining us all the way from Europe. Mr. Damani, great to have you with us here. Thank you very much for joining us. First up, let me wish you, your loved ones, your team, a very, very happy Diwali from all of us here at CNBC TV 18.
Thank you so much. A very happy Diwali to you, your viewers. Samvat 2082 may be a great start. And of course, this time I'm missing the clutter and the chaos of Dalal Street, replacing it with my family reunion going on in Europe. So glad to be with you on the show anyway.
It's wonderful, sir, and great that you could do this. Mr. Damani, simple question. Will Samvat 2082 be better than Samvat 2081?
First I have a difference of opinion with most people who are saying 2081 was a write-off year, was a disappointing year. It was actually a fine year. I think there's an artificial construct to look at the index from, say, April 1 to March 31st. I think it's the wrong way to look at it. Over the last 3-4 year period since the bull market has started, we've done exceptionally well. And I think we'll continue to do well. I see no reason to be pessimistic. And my suggestion to most investors or friends who ask me is to remain well invested in good quality companies.
Mr. Damani, what a pleasure to be speaking to you on this auspicious day on the Muhurat Trading session. And once again, wish you a very happy Diwali. So what's interesting is that this bank trade, or rather, should I say, maybe finally the bank call seems to be working well because those numbers have been coming through in a steady fashion. There are massive deals happening. I mean, look what RBL Bank announced just a day back. What are your thoughts on the financial space at this point? And what would you advise investors? How should they go about looking at banks and financials?
I think there's, despite, the negativity around the tariffs, I think the Indian corporate India has climbed these walls of worry pretty successfully. I think the fact that India is a big domestic economy, and it's doing well despite, obviously hit to sectors like textiles, gems, shrimp exports. I think it's a testament to how resilient the economy has become and how big and important the economy has become. And I think it's good that investors are not panicking and are staying invested. There might be some disappointment because returns have been lackluster, but I think that's missing the forest for the trees. I think just looking at it over a 1-year period makes you dissuaded from all the great things that happened in the last 3-4 years and will continue to happen over the next 2-3 years, Prashant, in my view. So I think this is the deal that happened is obviously very encouraging. It indicates a huge amount of money flow in India, and I think these deals will keep happening the next year in India.
Okay, that's interesting. So again, I mean, as investors, how should we understand this? And would you expect more deals in smaller private sector banks? And then does that make for a good investment case as this M&A action continues?
I'm not necessarily a banking expert, so I'm not really following that space very closely. But it would seem to me that there will be more deals coming through, yes.
Okay. Okay, so more deals coming, that is for sure. But, does it mean that really financials becomes the sector to watch then from that standpoint? I mean, I'm purely asking as investors, how should we look at the space?
Absolutely, with the economy growing, with GST cuts and with this big fill-up with interest rates that the RBI has given, that sector should do well. And if there's mergers and acquisition, that would add to the excitement of the sector, I think.
Right. No, absolutely. Mr. Damani, let me just now, in that sense, open it up a little bit, right? Let's talk about your ideas. Instead of asking you this or that, the themes, Mr. Damani, that you are bullish on from here on.
I think there are two sectors that we remain quite bullish on. The first theme, of course, the last 4 years have been led by the public sector stocks. And we continue to be bullish on that sector because what has happened for the first time after many, many years is that rather than private enterprise leading the sector up, it's government-owned capitalism, whether it's in America with Donald Trump directing investment, whether it's in China or whether it's in Japan. I think the government's capex is now leading edge of the boom in India, which has been true for the last 4 years. But I would say we shuffle the deck a little bit and move into new cards. So while defense and railways will probably continue to do fine, we are finding opportunities, say, in the shipbuilding sector, where the government has made a very loud noises that India should be building more ships. That means capex, and that means a great boom ahead for the Indian shipbuilding industry. I think there's a lot of clamor for rare earths now in the world. Everyone has realized the importance of rare earths. So my feeling is that the government is going to direct a lot of capex in some PSUs to explore and process rare earths. So I would look at those companies who will benefit from that. And the one that I've been particularly bullish on is I feel that a lot of construction and infrastructure activity. We're living in Bombay and we're going through an infrastructure boom without even realizing it. The coastal road, the highway, Bombay has finally become a world-class city. I think the temptation to do that in Delhi is also very strong. So as I always said, Delhi was a city that was built horizontally, but the government is now determined to build it vertically. So there may be 120 government colonies out there that were built horizontally over many, many years. In fact, since independence. And now they will be broken down and built vertically. So that creates a huge opportunity in terms of infrastructure development, in terms of financing those projects. So I think that sector. So among the PSU sector, we are bullish on the overall sector. I think you look at shipbuilding, infrastructure, and look at rare earths. And other than that, I think the one that I've turned quite bullish on recently is the pharma sector. I think in the mid-cap pharma, particularly the 2,000 to 10,000 crore space, I'm finding a lot of innovative companies that own proprietary technology, intellectual property, that are building vaccines, building out antibiotics, building out buying ANDAs. I think that we put a lot of fresh money into that. So I would suggest that if you want to look at Samvat to Samvat, but over a period of time, I think those two sectors will do well, Prashant.
All right, Mr. Damani, one final question. Possible to name, some companies? All right. We'll come back to you. And in fact, for the timing, let's just take the market opening. I think the pre-open rate actually was indicating a positive start. And bang on, we have 70 points higher that we're seeing on the Nifty itself. So it's a good start to trade. Whatever mid-caps volumes obviously shallow, but the breadth of the market as well, beautiful. You have close to 1,500 stocks that are advancing. And also in terms of stocks that are doing well, tech is doing well. The Nasdaq rallied overnight. You have Infosys that's up 1.5%. Tech Mahindra is up and about in today's trading session. What's not doing too well? ICICI Bank, yes, it was down close to around 3% or thereabouts today as well. It opens up with a bit of a cut. But otherwise, it's a good start to trade, keeping in line with what we've seen in the last few days. The Mahurat session actually has ended in the green majority of the times. And this time appears to be no different, at least the start. DCB Bank continues yesterday's good run, up close to around 5%. Jain Resource, that's the newly listed company, high volumes out there, that's up close to around 4.5%. And Tata Investment as well, on decent volumes, up close to around 3%, guys. Good, nice, green start.
Absolutely, it's a green start, and lots of stuff, right? Look at the mid-cap, the RBL and the Federal and the AU, and that was a pack which was up anything between 7 to 10%, and we'll have to see whether there is more here. Federal, of course, the board meeting is on Friday with regards to a fundraise. I mean, the other stuff, of course, is in the bag. But as I said earlier, there is chatter perhaps that there is in the smaller financial space, there is more deal making which is likely to take place as we go forward. So, we'll keep flashing the rates for you and tell you the big movers, etc. As we pick up on some of this market action. Najib, but I think let's continue with the chat with Mr. Damani.
Well, that's right, Mr. Damani. Always a pleasure, sir. Talking to you, I was hearing out some of your picks from shipbuilding, PSUs, the smaller pharma companies as well. But is it possible, Mr. Damani, to use some of these companies in each of these sectors as examples for our viewers, so we can drill it down a little bit?
Frowns upon that, so I'll pass on that particular question. But I think it's pretty easy from my speech to do a little bit of due diligence and research and see which of the stocks that benefit from, say, rare earth, which of the stocks that benefit from shipbuilding, or which of the stocks that benefit from construction. So a little bit of homework will probably give you the answers.
Okay, all right, Mr. Damani, let me try to push a little bit more. Shipbuilding, well, that's an area which has huge capital intensive, right? But the government has been pushing it, as you mentioned as well. The other areas as well that you described it are led by the government wanting to develop them. So state industrial policy has become extremely important part of it, hasn't it?
I think so, Prashant, because what happened was that, in the 80s, we had what is so-called Washington consensus after the Berlin Wall fell. Private markets, deregulation, liberalization, privatization, all these things happened. Unfortunately for us now, the pendulum has swung the other way. We're now having state-rated capitalism. In the 1980s, Japan toyed with it using the so-called MITI, the Ministry of Infrastructure, Trade and Industry, which directed consumer flows. Now, this is not necessarily the best thing for, we believe in free markets, so it's not necessarily the best thing, but the world is moving to that direction. You can see of all places, America, Donald Trump has invested in semiconductors technology, in rare earths, in so many other areas. In China, Alibaba and all are directing capital according to state. So the pendulum has swung, whether we like it or not. As Wayne Gretzky once famously said, my job is not to see where the puck is, but to see where it's going and to profit from that. So I think where it's going is, as you pointed out correctly, is going towards state-directed capitalism, state-directing being the leading edge of capex. And I think the last 3-4 years have proved that the state can direct these industries quite well, because they've had a great boom. I think the decks will be shuffled, and the three areas I mentioned should do well on a somewhat to somewhat basis.
You have you're a financial history buff. I think you showed some of that right now with that last answer, Mr. Damani. Let me look ahead with a global perspective, because here with this question there are historical parallels. Is there an AI bubble? Someone comparing it to the late 1990s. Do you think there is a bubble first up in terms of how capital is going into some of these plays? And is there any way to tell how close, how far we are from this bubble ripening and eventually bursting, if there is one? Your thoughts?
All bull markets end, Prashant, and so will this bull market that's going on in America. But is there some imminent danger of ending? I probably don't think so. Is AI a bubble in that terms? Yes, a lot of money is going into that sector, and it's masking a host of problems in America in terms of employment in other sectors, or rise of unemployment, maybe a bit of inflation. It is masking a whole amount of things. But let me give you an example. Recently, Google and Adani's announced a $15 billion data center in Visakhapatnam. largest FDI in Indian history. That's an incredible amount of money going into even the AI boom. Think of what's happening in America because of that. So I think there is still enough liquidity and enough interest in the market to prop up these sectors. Maybe we'll see a correction or maybe even a top in a few months. But as I'm standing at this point, I don't see a bubble. I don't see a top in this market. Markets are going to respond positively to signals in, semiconductors, in, data centers, in, network communications. So, it's very fashionable sometimes because the market has risen to call it a bubble. But I think that's probably missing the point. I think just because the market has risen doesn't make it a bubble. It means there's a lot of interest and activity by investors in that sector. So we remain, very productive on markets in America and in India at the current time.
Absolutely. And I'm so glad, Mr. Damani, you're talking about AI, right? Because we don't have too many specific direct AI plays here in India, though there's a lot of conversation building at a corporate level, at the government level as well. Now, again, from an investor lens, what does it mean? And we've seen stocks as well. I mean, go through the roof the moment there is any partnership announced with an NVIDIA, etc. But we need to, shift the wheat from the chaff, as they say. So how should investors look at the AI trade or the AI investing theme now?
Yeah, I think actually one that hasn't really worked out so far. I think the public digital stack, as we call it, is something that has done wonders for India in terms of UPI payments, Aadhaar, know your customers, in the whole bunch. And the listed companies haven't really done that well. But I think they will catch up ultimately. I think that is, in my view, India's pride and joy that we have our own digital stack. And I think the government is increasingly realizing that even in terms of basic messenger technology or basic chat technology, we need our own alternatives so that we can't be threatened in case of adverse relationships with a foreign power. So I think they will develop that. And I think some of the companies are not in the listed space, some are in the listed space. So we'll have to take it on a case-by-case basis. But I think it makes sense that we develop our own GPS system, for example, our own equivalent of WhatsApp, if you will, over time. Because I think the idea that you rely on a foreign technology powerhouse, is perhaps be given a bit short shrift now, because you realize there's a inherent danger in that.
All right, Mr. Damani, I would need to ask you about Mr. Trump, the most unpredictable factor. So let's talk about the second year of presidency. Do you think it'll be a little bit more smoother? And a bit about the India-US relations under Trump 2.0. We thought we'll get a good deal, not yet happened, but the hopes are high.
The US is the mothership, and the way it turns the tide affects the entire world. So I'm not going to mince words about that. I think Trump has changed the world for better or worse, that historians will decide, but he's changed the world. I think on the positive side, his foreign policy has been fabulous in the sense that he's brought the Middle East to heel. I think Iran, that used to be a threat to oil prices, is now a dying threat. The Palestinians are a dying threat. Israel has established itself as a power there. I think it's an incredible job what has happened in the Middle East, that 40, 50 years of instability that began with the Shah of Iran being toppled in 78, 79 is now over. And we can look forward to a period of reconstruction, peace, and prosperity in the Middle East. I think, unfortunately, where I disagree with him is on his domestic policy, where he favors, protectionism, favors tariffs, which all have proven. I mean, we've experienced that in India. Historically, we go back and study the smooth solid tariff that took place in America itself. They have not proved to be very productive. The good news, of course, is that the AI boom is, masking all these problems. Now, will they continue to mask it for a year? I think so far so good, as they say. I think there will ultimately be a price to be paid in America for a tariff, protectionist, non-inclusive policy. It was America that made the modern world, and they deserve a lot of credit for the prosperity that we've had for the last 30, 40 years. And in fact, they're going back on their own medicine and the medicine they taught the rest of the world to take. So that's an experiment that we'll be watching out. So the good news is, of course, there seems to be an era of peace and prosperity because the new strongman in town, there's a new sheriff in town. But its internal cracks, I think, are going to become more obvious as the year rolls on. I think right now the AI boom is perhaps masking it. But ultimately, there will be a price, I have no doubt, to be paid by, I think, the short-sighted economic policy.
Mr. Damani, you are a out-and-out equities guy, but of course, I mean, the other big bull market has been on in gold and silver, and so much opinion here, right? What is the outlook, according to you, just in terms of the parabolic moves we've seen, because it's also a financial asset out there, ETFs, et cetera, what is your call from here?
I think for gold and silver is a very legitimate question because they've had a fabulous bang up year. And if you're a trader or speculator, I quite understand that you feel FOMO having missed it, as I have. I've not really participated in the gold and silver move, despite the stellar moves out there. But over long terms, if you're looking between gold and silver and equity, remember there's a liquidity constraint, there's a carrying cost that is involved in those asset classes opposed to equity. I think it's a no-brainer. I think investors should continue to look at financialization of the savings, investing in equities. I think if you had bought when Infosys went public, to give you one example, and there are many other stocks like that, or gold at the same time, even in dollar terms, you've done so much better. Now, people always ask me, well, you picked Infosys as the best stock, but that's your job in life, to allocate capital properly, to pick the best stocks. If you're picking one asset class, I can pick the stock I want also. I think there's almost no comparison. I think over long terms of view, on any, in dollar terms, I think gold returns about 3 to 4% a year, while equity return 9 to 10% in dollar terms. So over long term, you want to put your money into equity and not gold. Having done well last year, that's great for a trader or speculator. But for an investor, I think the next 5 to 10 years promise to be as exciting as the next 5 to 10 years. Gold is probably just a good place if you're fearful of markets.
So your heart remains in equities as it always has been, Mr. Damani, and we really appreciate you being with us through the years, through the decades, to light up every Diwali and give us a lot of these valuable lessons for investing ahead. Thank you so much for joining us.
And a special thank you, Surabhi, because he's joining us from Europe.
Oh, yes, absolutely.
All the way from Zurich. So, Mr. Damani, thank you very much.
Absolutely. So have a fantastic festive next couple of days, and we look forward to our next conversation soon. Well, just a quick glance at the market, which is still retaining actually the green color, so 55 points up. And we'll just fire up some of the stocks which are bursting like patakas. Tata Investment should definitely come up on your screen. 7% on Tata Investment. The South Indian Bank, that's been looking quite smart, 4.5% up. DCB Bank, after yesterday's breathtaking rally, DCB is still moving today. Of course, volumes would be thinner for, it is a shorter session, not very big on volumes, but DCB is up about 6% as well. Subros, lots of names on the broader market screen, which are looking good. Nigel.
Just one more, going by the festive cheer, Allied Blenders is a stock that's bursting up. It's up close to 4.5% as we speak. So massive volumes on that one, and Tilaknagar Industries as well. So with the festive cheer, we're seeing some of these stocks actually. Allied Blenders, not DCB Bank. Let's pull up Allied Blenders. Radico, I think, has had a big run in the last few days. That as well is up close to around 1%, if you can get an intraday chart as well up. And even Tilaknagar Industries. So all these three in the festive mode. Actually, I've been extremely good this year. So I have no contribution to this. But I think, the street is reading through, I think, some GM Buries and the likes came out with a good set of numbers, I think. Yeah. And post that, you're seeing some excitement in the pack. Actually,
Alcobev has done really well in deals in the Alcobev space as well. Volumes moving higher. So lots happening in that sector. We'll discuss that and more with our next set of guests. We have Deepan Mehta joining in and Mitesh Thakkar as well. Thank you, gentlemen, so much for being with us. First of all, wish you all a very, very happy Diwali, you, your family members, and everybody in your offices as well. First, a word of gratitude. You stay with us through the year, decoding the markets, getting us the best of the trades and the best of the stock ideas. So thank you first. And of course, a happy Diwali to both. So let me start by asking Deepan, how's the Josh?
So we thank you for having me on your show, and it's been a privilege, being with CNBC over the past several decades or so, and wishing the entire team at CNBC a very, very happy Diwali. And in my guts, I feel that this is going to be a great, great prosperous year for investors. So looking forward to an absolute fabulous new year as well, with even more fatakas. Thank you.
Absolutely. And Mitesh, I mean, in terms of, and before we talk about today's trading session, I want to extend that slightly longer term question to you. Now, if you ask market pundits, the feeling in most people's, that gut feeling is that it's getting better from here. Things are resolving. FPI selling is resolving. Maybe US-India issues and trade issues, they're resolving as well. Earnings seem to be turning around. So all the fundamental chatter is getting increasingly positive. Do you see some sort of that build up on the charts as well, medium term?
Good afternoon, Sobi, and Diwali wishes to you, the entire CNBC family. I think there's something, which is very interesting. We had a monthly high of 25,810 in September 24, went down all the way to about 21,500, came to about 25,500, which was the closing high in June, and that completed what we call as a cup. Then we had a couple of months of pullback till August, and then we have kind of started moving up. So this looks like, slightly twisted, but a variation of a cup and handle pattern, which is quite bullish. Now, what is left on the upside is the earlier highs. The Nifty is yet to clear the highs of 26,200, which is where we had the 26,180, which is where we had the weekly high. But overall, the pattern is bullish on the monthly charts, which means that typically, once we clear this 26,000, 26,200 band, I think we should brace ourselves for a test of at least, if not an aggressive side, 27,500, but on a logical side, I think this could be a 29,000, 29,500 kind of an index reading over the next few months. So yes, the long-term charts have slightly started shifting on the upside. A final breakout will come, once we get into new highs.
Okay, all right. Good afternoon, gentlemen, and welcome to the show, and happy Diwali to both of you all as well as your families as well. Deepan, I'm coming across to you. I think the Alco-Bev space is something that you've liked, but let's get in your picks for the year. If you could be gracious enough and give us two stock picks that investors should watch out for the next year. Go ahead, Deepan.
Hey, Nigel, happy Diwali to you as well, and good afternoon. I think, you said the names of the companies. So Allied Blenders, which is India's largest Alco-Bev company in terms of volume, is definitely one of the top picks one could investors would look at. Disclosure, we and our clients are invested. And look at the numbers which have come through, phenomenal last 2-3 quarters. They're moving up the value chain. More and more premiumization is helping grow the margins, and a lot of the kind of brands and the kind of network which they have, the strength which they have, they're really playing to it. But, a hit and miss, a really great stock to look at with a high risk, high return is Tilak Nagar Industries. Because they have this problem with Mansion House, and if for something were to happen over there, then you will see a steep correction. But if Mansion House remains within their stable and the new acquisition which they have done, if they're able to integrate it well and grow that business, then this will be one of the leading Alco-Bev companies. Valuations are reasonable, much more reasonable compared to its peer group. So I think if you just stick to these two companies in the Alco-Bev industry, I think you should do pretty much fine. But as I said, I think this is an industry where you could expect earnings volatility because there's a lot of state government and local regulations which need to be followed. And those changes do tend to impact performance from time to time.
Okay, so Alco-Bev indeed is the sector of choice, it seems, in some stock ideas there as well. Mitesh, quickly, Diwali picks, what do you have for us?
I have two stocks. DCB Bank was just discussed, and again, this is one stock where the long-term charts have turned extremely positive. So take a slightly deeper stock at about 143, 142, which is roughly about 7-8% from here. The way the stock price has broken out of the recent monthly highs, I think good chance that we are looking at 200 kind of a target. So you have a good risk-reward equation, a 12-13 point kind of a risk against a 50-odd point kind of a profit possibility over the next few months. So that's very, very positive for me. The other stock which I like and which I think can be good from a trading point of view as well, and disclaimer that we have some positions, is Torrent Power. I think that's something which the long-term charts are pretty good, and the short-term charts are also now turning on the upside. So my sense is that the stock in the medium term, I would look at a target of around 1550, but then in the longer term, possibly beyond 1700. But in the short term as well, as long as the stock is about 1280, I think good chance that we could see a first rally to about 1370, and in a good case, 1450 to 1460 on the upside.
Torrent Power and DCB Bank, and of course, two Alco-Bev names for Deepan. Gentlemen, happy Diwali to both of you. Lovely to see you on Mahurat Day. Thank you both for joining us today, and here's to a very profitable Samvat 2082 to both of you, and of course to everyone as well. Let's cut across to our team of reporters now who are standing by. Yash is at the NSE and Madiha is at the BSE. Yash and Madiha, a very happy Diwali to the both of you. Thank you very much for being with us and being feet on the ground in terms of what's happening. So I want to come to the both of you and just sort of run us through what's happening there, what's the mood like, and just, the proceedings underway, which I can see behind you. But Yash, take it away first.
Well, first of all, of course, a very Shubh Samvat to all our viewers as well as you guys in the studio. The market quite vibrant on the day that it should be, and I'm here where everyone here present is celebrating the vibrancy of equity markets. I'm coming to you from the National Stock Exchange, and as you can see behind me, brokers from various levels have come together here, celebrating today's day, celebrating the auspicious occasion of Diwali. Speaking about markets, of course, the families of the various brokers are also here, and certainly a lot of wives today telling their husbands here that they've been the better asset managers for the year, with the gold and silver and the way that asset class has performed as against equity. But of course, the husband saying that and hoping, praying that next year is for asset class. We just heard Bala Subramaniam of Aditya Birla Sun Life as well as Ashish Kumar Chauhan talking about how they are hopeful that there will be a very strong teji when it comes to equity as an asset class for the coming year. And that is what today is all about, right? Hoping for the best in what you do for the coming Samvat. And this is what the mood is like as far as the National Stock Exchange is concerned. Of course, right now, all the brokers being felicitated for the work that they've done towards India's asset class, equity class this year, following which there will be a Lakshmi Pujan and things
And
thereon.
Yash, we're going to wait for that chat with Ashish Kumar Chauhan as well. That's coming up at 2:45. Thank you very much. Madhya, what's happening at the BSE? Okay, there's a gentleman in front of the camera.
Well, Prashant, as Yash was mentioning about the mood at the National Stock Exchange, the same mood is at the Bombay Stock Exchange as well. It is electric, it is vibrant, there are cheers, there's applause. Brokers, when the trading session opened, the brokers were all shouting, screaming, placing their bets. And what you see behind me is brokers and their families, gathered here to celebrate this auspicious trade of the year. You can see brokers in traditional attire, they're offering sweets, lighting diyas, and now a short while ago they were glued to their terminals as the first trades start ticking in. This 1 hour special session isn't just symbolic, it is about it is emotional for many traders. It has a lot of history. It has a lot of nostalgia attached to this practice because trading right now is online. People can buy their trade online. But brokers, old brokers, they prefer coming here in person. They get to catch up with each other. They get to wish Diwali, wish Diwali greetings to each other. And what happened a while back was brokers were all glued to their terminals and they were placing their bets. Samvat 2082 is about, marking the first start of the year for trading, for investment. So what happens for Samvat 2082 is people make their first bets to start the year on an auspicious note, on a very positive note, and looking forward to a very, very positive future.
Absolutely. Madhya, you're looking great as well. I can see Mr. Ramamurthy, I can see Goddess Lakshmi there, the beautiful sort of Murti when we cut to it. Yash and Madhya, thank you both for joining us and running us through what's happening at the two exchanges, BSE and NSE. We're going to take a quick commercial break here. We're going to come back in just a bit from now. We've got a stellar lineup in a bit from now. So we have Atul Suri of Marathon PMS join us. And we have Nilesh of Envision Capital with us as well in just a bit from now.
Welcome back. You're tuned into CNBC TV 18 on this very special coverage at Mahurat Trading 2082. Well, everyone's been talking about this lackluster performance of the Indian markets in the last few years. The big question is, could the tide finally be turning for the Indian markets? And I think probably yes. I'm just going to put out 4 big points. Nifty has underperformed. We all know about that. But that could be setting the stage in itself. Now, if you just look at the numbers, Nifty has clocked the second worst performing year in the last 5. If you compare it in dollar terms to the other performing markets as well, the underperformance is quite stark. And while the United States has been driven by mega cap tech as well as AI mania, India's relative lag creates an interesting setup out here. So that's point number 1. Basically, we have underperformed. And when everyone's chasing the same trade abroad, sometimes the best opportunities could actually be back home. So that's point number 1. India's underperformed in the past year. That could be the first setup. Next up, AI. From FOMO to JOMO. That could be another play, right? Because everyone's been saying India has actually missed out with regard to that AI trade. And in the United States, AI has driven close to around 80% of the stock market gains in the past year. Corporate AI spending now accounts for around 40% of the GDP growth. And NVIDIA now makes up close to around 8% of the S&P 500, which is the highest ever for a single stock. Its market cap, by the way, is equivalent to close to around 15% of the US GDP. Now, for India, sitting out of the AI mania may actually be the JOMO moment or the joy of missing out, because capital often seeks new opportunities when trades get a little bit too crowded. So maybe missing out on AI mania could now be a positive since it got overcrowded. Just maybe. Point number 2. Point number 3. FI flows. Now, there are signs of them pivoting, right? Over the last few weeks, the selling from foreign institutional investors, that's turned a little bit. In fact, in the last 4 sessions, they've turned buyers. So they have a year for Diwali, actually. And on the derivative side as well, the short positioning, well, it's eased down from around 94% to around 82% or thereabouts. That's point number 3 with regard to the FI positioning. And finally, Nifty versus gold. Yes, gold has done very, very well in the last 1 year. But can Nifty outperform from here? Probably yes. If you look at the Nifty to gold ratio, that's sub 2.2. And normally that's a level when, in fact, things normally turn in favor of the Indian equity markets. That's at least what history suggests. So maybe, guys, it's too early to get excited. But at least it appears, just going by some of these factors, that risk-reward could be turning in favor of the Indian markets. And I hope so.
Absolutely, Nigel, and I think good points, right? I mean, in one place. We have Atul Suri now joining us. And Atul, great to have you with us here. And sorry to have kept you waiting. Happy Diwali to you, your loved ones and family. Appreciate it. I'll tell you an anecdote. I was with Ramdev ji and I asked him, market kya lagta hai? He said, you should ask Atul Suri. Because he's the man with the view on the Nifty. And that's exactly what we're going to do. Nilesh Shah is also with us right here. Nilesh, happy Diwali to you, your family, loved ones. Great to have you with us here.
Happy Diwali to you, Prashant, and to all of you all, and to all the viewers as well. And may this next Samvat be essentially even a much, much better Samvat than what it has
Absolutely.
been.
But I'd like to say one thing before we go back to Atul and ask him that $1 trillion question about where's the Nifty going. But it's also been a fantastic year because it has taught us the biggest virtue, the virtue of patience, right? And Indian investors have kind of passed that test with flying colors, largely been patient, all of the domestic money, and continuing to pour in. So now let's ask Atul, will that patience be rewarded?
Board se pehle kya hota tha? Pre-boards hota tha. So pre-boards clear ho gaya. Abhi boards,
They've not thrown in the towel. 1 year of the market testing people's patience, portfolios, kind of,
You'll have set things up. Atul is raring to go. Atul, coming across to you. Tell us, what are the levels? Where's Nifty heading?
No, I think that optically you may say that the Nifty is where it is a year ago, but it's been a difficult year because if you look at the time spent, 80% of the time it was below this level. So I think it's a bit of a time correction. One has to remember that India was also a very big outperformer from 2020 right up to 2024. We were actually a global leader. So to some extent, we have spent 1 year as a time correction. The pain has been more because the way you see global markets have performed. I mean, you spoke about Korea, etc. Look at countries like Greece or look at some of the European countries and you will find a 60-70% kind of return. So to some extent, India for the year has underperformed global peers by almost about 20% if you take them on a consolidated basis. I feel that this pattern is breaking out. Why I feel it is breaking out is because what I'm seeing is a very interesting sector rotation, right? If you look at the sectors that dominated from 2022 to 2024, that kind of 1.5, 2 year bull market, you'll find that industrials did well, PSUs did well. But you look at the market, the way it is panning out right now. the first major sectorial index to break to lifetime high is banks. And if you remember, between 2022 and 24, banks were a dog. They were the biggest underperformers. And banks are very important because BFSI collectively is 33 or 34% of the Nifty. So why I feel optimistic or why I feel we will break out is because the lead sector, the biggest elephant in the room, has broken out to lifetime highs. So when I see the pattern, I get a sense that we are setting up for a 30,000 Nifty in a year's time, which will be about a 16 to 17% higher from here. But in this, I feel there will be a very divergent trend because, as I said, leadership has changed. You will find that banks, which were laggards in the last bull market, actually leading. You will find some sectors like autos at lifetime highs. Metals, interestingly, are globally in a very big bull market. So these sectors which were underperformers or relatively underowned are actually catching up. Two sectors that led the last rally are actually doing nothing. One is industrials. If you look at a lot of the industrial stocks, they're still 20, 30% lower from lifetime highs.
Right.
And barring defense and PSUs, they're down 30, 40%.
Yeah.
I think they're setting up for a 16, 18% up move.
Okay.
For divergent sectors.
So same time next year, 30,000 on the Nifty. Atul, just to get those levels out.
I would be a little more optimistic. I would hope earlier than that.
Earlier than that. Okay. And banks, I just want to get the levels out of the way. We're at what, 58,000? And you said banks is the first index to have broken out. What do you see here?
Right. What I feel is that though I'm talking about a 16, 18% up move in the Nifty, I feel banks will outperform even that target. The reason is, Prashant, because, if you look at the composition, there are 2 or 3 sectors which are actually struggling. One of them is IT, which is actually off 23% from lifetime highs. Second is energy. This is about 20 odd percent. So when you have 2 heavyweight sectors underperforming, you will have to offset it with some other sector. And the only guy who can pull its weight or who can pull or offset this is banking. So I have a feeling that banks will outperform the Nifty target. And as I said, the good part was that banks have underperformed for about 2 years prior to this. They're underowned, underloved. And whenever that plays out, I have a feeling that banking actually will be the whole BFSI space will be an outperforming sector in the overall Nifty basket.
And within within financials, we'll get to stocks and we'll ask you, Diwali picks banta hai. But within banks sectorally, there are various sectors within banks, right? Capital markets and NBFCs and housing finance, MFI. Any preferences?
Yeah, I think the capital market plays has volatility, but I have a feeling that if the markets make new highs, again, you will find that volumes will increase and all the ancillary businesses will do well. So I think that whole AMC business, the broking business, I feel is one big mega trend. And I do see that this sector or this space would revive. I feel insurance is another very important thing. I think after GST, the kind of impact that you'll have and the kind of numbers that you have, I have a feeling insurance would play out Consumer finance, again, I feel that this whole GST cut, etc. Consumer finance is a very sweet spot because, you have the discretionary consumption play, hopefully reviving, fingers crossed on that. Plus you have the financial play. So I would actually play these small themes. They may not be in your large, big banks, but this would be more in the mid-cap kind of space. And I have a feeling that you could actually have some very big rocket moves out there.
Okay, rocket moves. You said it, Atul. Looking and sounding as fiery as I see you on your morning walks and morning runs as well. So cut that. But let's go across to Nilesh, who's with us in the studio. Nilesh, first tell us what's the secret? All these years, Mahurat to Mahurat, the look is the same. What's the anti-aging? Yeah. You tell me that later post the show.
But I'll tell you the secret. I offered him coffee, he said no.
I'll tell you another secret. I've offered him a drink, he said no.
I think it's very, very
teetotaler.
No.
These are places to invest, not to consume.
Absolutely. So let's get to the investments then. A lot of viewers, they tune into Mahurat and they want to know well-placed stocks. So you could tell us, a stock that's well-placed for the next couple of years, or maybe a stock that you'll just got into. But if you could tell us the name of the stock and the rationale behind you guys being bullish.
So I think 2 categories. One essentially is the smaller banks. I think the smaller banks seem to be well-positioned. They have essentially obviously underperformed for some time. But I think the entire environment is just pretty much ripe for them. They probably could go through a Goldilocks kind of situation. NIMs bottoming out, credit offtake picking up, and leading to re-rating. I think that's an interesting segment. The other whole segment is around decarbonization, electrification, and the consumer opportunity. One space that we've really liked out there is basically electric two-wheelers as a space. And thankfully, we've had IPOs from this table in the last 1 year. Within that, our investment has been on Ather. That's one name which essentially has been very technology-led. It believes in delivering a very strong consumer experience and has been able to kind of gain market share despite the fact that the big legacy players have come in and upped the ante as far as electric two-wheelers is concerned. Clearly, the big trigger out there essentially is increasing adoption of electric two-wheelers within the entire scooter or motorcycle segment. Motorcycle is still very kind of infant. It's probably not there in terms of the electric motorcycles, but electric scooters, I think, seems to be an exciting space where if the adoption picks up, this as a category could end up delivering double-digit kind of growth.
Speaking of double-digit growth, I want to get to gold and silver with Atul in a bit. But before that, Nilesh, I mean, you're someone who's been a technology watcher for decades, right? And we've had this conversation in the past about how legacy IT services are going through their motions, and it's been the worst performing part of the market in the last 1 year. On the other side, anything that has even a hint of AI or some sort of an outside partnership with NVIDIA, stocks just go through the roof. So you need to be very careful. I know you're very bullish on these digital plays, but can they be money-making opportunities here despite the elevated valuations, or do you need to be careful now?
No, absolutely. I mean, these are essentially, I think, great compounding opportunities. They're great wealth creation opportunities for maybe not just the next 1 year, but I probably think next 3 years, 5 years, 10 years. I think probably the trend in them has just started sometime in maybe 22 or so. So it's just been barely 3 years. And I think this is truly a mega cycle. It's a super cycle. The opportunity is humongous that you are able to kind of have crores of customers or millions of customers into your fold and pretty much offer them everything that they can think of on a daily basis. I think the market opportunity is huge and humongous. I don't think essentially these are companies that are going to just capped out at 3 lakh crore market cap or anything like that. It's possible that they're probably today in the quick commerce side, the revenues are around 40-50,000 crores. I probably think the bull market in them will continue as long as probably they get to 3 lakh crore, 5 lakh crore in terms of revenues. And they start to kind of make 20-25,000 crores of EBITDA and market starts to give them those 30, 40, 50, or maybe even 100 P multiples. That's really when you could actually say that the bull market is now probably maturing in them. So I think...
But be with because the thing is that there is still competition. Some of them are still at a cash burn stage. They're investing in multiple businesses. So then what? Just be with the biggest... And the biggest is now part of the Nifty.
Absolutely. I mean, absolutely. I mean, I'm just saying, if you thought 25 years ago that it's essentially private sector banks, you just had to be really the player who was at the forefront of that, period. The next 20, 25 years, you never have had to look back.
Sure. Yeah, Nilesh, two things. 30,000 crores Ather market cap. What would you... It's an indirect way of asking you, where is it?
That's always tricky.
What's your prognosis, I mean, roughly?
No, I think it's done very well.
For our viewers, it's a stock you bought, it's the last stock you bought in the portfolio. One of the last stocks you've bought. So it's a recent purchase for you.
So I think there are two bets out there. One, the bet is that basically the scooter as a category itself grows maybe in high single digit. Okay, so that's one. So maybe over a 5-year time horizon, maybe the demand for overall scooters put together could be 40-50% higher. And within that, if the share or the adoption of electric scooters goes up from, say, something like, say, 15% today, I think of 10 million scooters that we sell every year, 1 million is electric scooters. That 15% going to maybe even 75% in the next 5 years or 7 years. It's just a question of the bet you make that how much more adoption will be happen. Are we done with that 15%? Surely not. Can we get to 75%?
So 10 lakh goes to about 75 lakhs. I mean,
that's basically the kind of opportunity size which you... So you could have a category which itself could grow 6, 7, 8 times from here over the next maybe 5 years.
You started with private sector banks, smaller private sector banks. What there?
So I think we own a bank which essentially is into retail banking. That's been a very big fast. They've had some challenges on microfinance side, but I clearly think that's behind them.
I mean, just
so we've been owning IDFC First Bank for some time, and I think clearly it looks like that. I think from the management's most recent commentary that the worst is behind for them, and clearly better days lie ahead over the next few years. They've essentially, I think, also had a fair bit of funding coming in from two big marquee global investors. So I think even from a cap raise, they seem to be sorted. It's now all about execution, execution, and execution. The other is we've been liking that is essentially a payment bank out there, which essentially has been waiting for an approval from the RBI.
ATM.
The Fino payment.
Fino payment.
That's the second one we've been. We own Paytm as well, but that's not a bank. That's a payment fintech. We like that as well. But here in terms of tier 2 banks,
Fino, guys, we should pull up Fino, right? That's the Fino Payment Bank is what you own.
That's right.
You've owned it for a while.
Yes, we've owned it for more than a year now.
Okay, all right, Nilesh. I think our friends at Avaz are waiting for you. We're told.
Yes.
So we thank you.
Thank
those
you.
are some Diwali
Thanks a
gifts and really ways to think about how to construct your portfolio into Samvat 2082. Really appreciate it.
Happy Diwali to you. Happy Diwali.
Bye. Happy Diwali.
Much.
Well, which gets us back to Atul. Atul, thanks for staying back because we have more questions for you. I'm just going to ask you the question that I think everyone has on their mind. Those who've owned adequate gold, whether physical or ETF or whichever format, are supercharged and super happy. Those who don't have adequate exposure have had major FOMO, waiting for the dip, which never came. What should people do with gold and silver now?
See, Surbhi, if you look at gold on very long-term charts, you'll find that this is an asset class that frustrates you and sometimes gets euphoric, right? It has decades of underperformance, and then in a year or two, it does what it's not done in a decade. And we are seeing that. Now, what is the factor that causes gold to move up? I mean, it doesn't have any earnings. We know it doesn't, there's no valuation matrix, et cetera, et cetera. We know about that. But what happens whenever there is times of uncertainty, money looks for alternative asset classes, looks for safety. And, the way the geopolitics of the world is going on, the way, I mean, whether you like it or not, the whole Trump trade is playing out, and you have 3 years more of rule by this person. So you realize that there is going to be uncertainty. That is for sure. And in these points in time, I don't think gold as an asset class is dying out. I have a feeling that this will remain very centric to many persons' portfolio. The issue is that in the last 2 or 3 months, it has moved parabolic. I mean, I think from August, from I think 3,200 or thereabouts, it's at 42, 43. So it's moved almost 30, 35% in a matter of 2 to 3 months. Will I chase it now? The answer is no, because I have not seen parabolic moves sustain. There could be corrections, and I hope there are corrections. But if you're a long-term strategic allocator, I wouldn't find any reason for you to exit gold. If you have gotten or not gotten, I have a feeling there will be a correction, because the move in the last 3 months has been very, very sharp, very, very parabolic. And typically what happens is everyone around you only wants to know about gold. And when that happens, there is an issue. Like my personal trainer in the morning, he used to always ask me what stock tips. Now he never asks me stock tips. He's saying gold, silver mein kya karne ka. So to some extent, he's my litmus test, or he's my decider. So when the whole crowd is into it, which is what I feel the short-term risk is to it, it could correct. But as a part of your portfolio, I do think that uncertainty is going to be there with the kind of politics that is playing out in the US.
Yeah.
So it's going to be around for some
But the parabolic move may, you've got to be careful, absolutely. And I think that's good advice, Atul. Let's come back to equities, stocks. 3 ideas from you. Or, if you want to make it 5, go ahead.
let's do one. I never do. This is the only time I do that exception. So as I said that,
little diversification. There may be 2, but go on. Yeah, whatever.
So what happens is that, as I spoke about that, the last few years, our biggest underweight have been banks in our portfolio. And in the last few months, our biggest overweight is banks and financials. So we feel that there is the biggest thematic play, I feel, is in the last 3-4 years is going to be the way banks and financials are going to be a part of the portfolio. So in that space, in an NBFC place, I like payment play, which is Paytm. Disclaimer, it's a part of my portfolio. Please do your own research. I could have had vested interest. So we find Paytm very interesting. What I find interesting about it is obviously the fact that it is a financial play. We know the kind of usage. I feel that this whole consumption story could play out. This whole GST cut could play out towards the end of the year. And plus, I really love the platform businesses. I love it for the scalability that they have. So I feel that even the numbers have started coming. So it's an interplay of multiple of these factors where I really feel that it's a part of my portfolio with a large overweight position. So I, for one, would bet on Paytm. Again, all disclaimers in place.
All disclaimers. We have noted that down, Atul. And Good to hear your thoughts, as always, sounding quite bullish. I think equity is over gold as of now. And if there was that one pick that you're fully, quite bullish on with due disclosures, it would be Paytm. Thanks a lot, Atul, for joining in on this Mahurat trading session. Join more often. Will be more fun. We'll do maybe sometime in the December, maybe. But thanks a lot for joining in. I'll tell you what, we'll slip into a short break. On the other side, we have Deven as well as Dharmesh who are waiting for us. They as well will be generous enough and share a couple of picks. I'm sure you don't want to miss them. Welcome back to the special coverage of Mahurat Trade this Diwali. Well, as promised, we have Dharmesh Kant of Chola Securities who joins us on the show. Hi, Dharmesh. Good to have you on the show. Happy Diwali to you, your family, and your entire team. Dharmesh, give us that, give us a couple of picks. Be lenient today and generous, actually. And give us two picks. If you could potentially put in a target price as well as the rationale will be good as well. Go ahead, Dharmesh.
Sure, Nigel. Happy Diwali to you and all your family members and the entire team at CNBC TV 18. Let this year be very prosperous and wealthy for all of us. So, Nigel, the first pick is the wildcard entry. That's the Orient Pro Solutions Limited. I think this company's phenomenal performance for the last 3 years. 30% kind of a compounding on the profitability. And three quick pointers, if I can point out. One is the AI-enabled transaction banking and suites with all the banking and fintech in play. They have recently won an order from SBI, which opens doors for many other banks.
Dharmesh,
yeah.
Dharmesh, we missed the stock name.
The stock name is Orient Pro Solutions Limited.
Okay. Okay.
Yeah. And the second, rationale.
No, you were giving us the rationale. Please go ahead.
Yeah. Thanks. And the second rationale is the data center play is also there. Around 20% of the revenue comes through that. And that is the architecture stack of the data center. So that's an asset-light model. They just, design the data center and put that into play. They are gaining a good traction out there. And the third one is the entire, transit mobility and ticketing system. They have recently won an order from California Open Loop Mobility System. India, Delhi Metro, Chennai, and Mumbai is already in place and winning more. I think profitability by FY27 will move from 188 crores to almost 308 crores. 30% kind of a compounding will there with, or improving operating margins. So our target price for 1 year is 1,617.5, but I think it will be re-rated and it looks like a double. The other in the pick is Reliance Industries. It's a stable, solid opener out there. And as the name suggests, it's been a consistent, compounder and wealth creator for decades for the Indian equity market. And the quick reason I would highlight is in the valuation of Reliance Industries, the present market cap, I think all the verticals, be it O2C, exploration and production, or the other verticals of Geo Platform is fully priced in. What is not priced in is the retail vertical of Reliance Industries. This time the posted around 17-18% kind of a growth numbers. Subsequently, it's likely to do so. The grocery, apparel, textile, and jewelry, plus the consumer electronic appliances and the beauty care all put together, they're likely to post a top line of around 350,000 odd crores with an EBITDA of 27 to 28,000 odd crores. Compared to this, with all the names of the top names in this industry, be it DMart, Nykaa, Trend, Titan, or the Whirlpools of the world, put together, do a top line of 270,000 crores with an EBITDA of 20,000 odd crores. They are valued at 6 times their sales on an aggregate level, whereas Reliance Retail, as of now, is valued at around 2 times of sales at the aggregate level. I think a lot of value unlocking is likely to be played. Our 1 year target for Reliance Industries is 1650. It's there in our Diwali basket as well. But I do think if someone is willing to wait for 2 or 3 years, is a multi-bagger or a doubler from the current levels.
Okay, Reliance going with the big boy. Got that. Dharmesh, stay on more questions in just a bit. But let's head across back to the BSE because our colleague Madhya, I think, is in conversation with Mr. Ramamurthy.
The able guidance of our Prime Minister, the country has maintained its position and still shown a very good GDP growth and also showing prospects of further GDP growth. I think that is the greatness of this year.
So how much of this growth are you expecting to see on the Bombay Stock Exchange in terms of volumes?
As you know from CNBC, we have never been behind the volume game. Our point of view has always been deepening and broadening of markets and customer satisfaction. In Hindi, we always say, Prasannit Grahak is what is our goal. We are marching towards that. If we look at it from our own metrics, which we have put in place, to check whether we are deepening and broadening the markets for BSE or not, we are very satisfied. In terms of the brokers covered, in terms of the software vendors who are supporting us, in terms of research people who are covering BSE stocks now, in terms of the number of colo racks that we have allotted, in terms of number of investor awareness programs that we are doing, in terms of number of investor awareness programs for which we associate ourselves with our regulator, who's doing a lot for investor awareness. In all this, I find we are progressing. For us, volume is a byproduct. Revenue is therefore another byproduct. We run behind deepening and broadening of markets.
Okay, all right. So saying BSE is not ever running behind volumes, looking at deepening of the market, broadening of the market, and just the growth of the investment and trading culture in the country. That is the top boss at the Bombay Stock Exchange. The market, by the way, as we are looking at the final rates coming through, absolutely flat. So the little bit of a pop that we had at the start of the session, it's kind of fizzled out. It's okay. Some profit taking. We saw a bit of that on Monday as well. The Nifty quite steady at around the 25,840 handle. In fact, let me just quickly run through some of the major gainers of the day, given the Muhurat session. Cipla, Bajaj Finserv, there's Axis Bank, there's Infosys. These are the stocks that have led from the top. I mean, the top 5 names, so to speak. There's a bit of Dr. Reddy's as well. Some of the pharma names have actually done pretty okay. On the downside, let's see what's succumbed to profit taking. There's ICICI Bank among the large names. There is HCL Tech and TCS, 2 tech names. And even Kotak saw some profit taking in this session. So overall, final rates now as they settle down, we are just a tinge into the negative now, about 1 or 2 points lower. So basically at the flat line, that's how the session seems to be concluding. And the mid-cap index is also absolutely flat. But I guess, folks, I mean, it's not too bad, right? Because we've had a pretty decent run-up. The market in a short burst in October so far is already up 5% at the index level. So maybe just pausing for breath. That's what it's been.
Well, that's right. Nilesh has told us about Ather, one of the stocks. The stock is going to go home on Muhurat Day with a gain of around 8%. So big move out there. DCP is the other one, as we had mentioned earlier, that as well up close to around 10%. So quite a few of these names actually from the broader markets have done well. Saman Capital, I recall, they announced that big deal and the stock had corrected. And from there, in fact, it's picked up the pieces because I think it had gone to around 180 ballpark odd, corrected all the way to sub $150. And now it's put on some weight as well, moving on high volumes even in today's trading session. Well, before we wind down, I think we have Dharmesh. Dharmesh, you've given us 2 Orient Pro solutions from the broader markets, and Reliance Industries, the big boy. It'll have to do the heavy lifting this year if the Nifty needs to move up. Dharmesh, it's feeling festive. Give us one more.
Yeah, sure, Nigel. The other one is from the banking space. I think banks are doing pretty well, particularly the public sector banks. If you look at them, the asset quality improvement has been quite great. And we like Bank of India the most just because it's pretty undervalued. The valuation is around 0.6 times price to book value, multiples with advances growing at 14%. And credit cost, asset quality, everything falling into place. They are reducing one of the best in the industry as of now. Going forward, I think the 2 verticals which will do the catch up for the 16-17% kind of credit growth is one with the retail, where they have 3% kind of AUM exposure right now, and the vehicles, which they have 1.9 to 2% kind of exposure. The management was very aggressive about that. I think this will fall into play, and the ROE will move from 0.9 to 1%. So the moment it is above 1% kind of an ROE, it will deserve a serious re-rating. 1-year target price for that is 155. But I think multiple re-rating is around the corner for Bank of India. A good solid stock to be there in your portfolio.
Dharmesh, great speaking with you. Just stay with us. I'm going to bring in Deven Choksi as well. who's obviously been a constant on CNBC TV 18 for the last few decades. Devin, happy Diwali to you, your team. Great to be speaking to you on this auspicious occasion. Let me dive straight to it. Pick for Samvat 2082, Devin, if you will.
Yes, Prashant, happy Diwali and wish you all a very happy New Year in advance. I pray God for, I think, all-round prosperity and health for all of us. Well, I think there are companies which are going to grow bigger in size, and that's what I think we are likely to experience in this financial year, as well as I think the Samvat year 2082. We believe that I think some of the companies in the real estate space and in the auto space, auto ancillary in particular, they could possibly give, I think, at a rate of around 30% kind of a CAGR return over next 3 years or so. And that's where probably I think the inclination is, because the discretionary spending is on rise. Interest rate is on a lower side. Due to the GST cut, I think the input cost is coming down, and that is a good formula for some of the auto ends, as well as I think the real estate, particularly luxury segment real estate, likes of Lotus developers. I think they remain relatively more sure bet as far as I think the growth, along with the higher return on capital employed. So we remain more comfortable on that.
Got that. I'm going to just look at market closing, which is going to come up on your screens. I think we are, a minute away and counting down with the last trades this Muhurat session. So, we actually went up all the way to what? We went up to a high of 25,935. And we basically end about 100 points off the high. So 25,825 is actually exactly 100 points off the high is where the Nifty today ends at. Let's just look at the Nifty Bank as well, and I think gives you a quick sense of where that is at. Again, something similar. The high today was 58,155. 57,890 is the final close on the Nifty Bank. And it's been an inside day for the Nifty Bank, basically trading within the range of what we saw yesterday. Yesterday, of course, we made a big, jumpy kind of high at 50, which is the high at 58,155 was the high yesterday. So that was a big one. Actually, no, yesterday's high was 58,261, so we didn't quite get to those levels. Fell about 100 points off the highest from yesterday. Mid-cap index on your screen. The small-cap index ends kind of flattish to slightly sideways. Market breadth positive. On the BSE, 1,000 odd stocks higher, about 700 stocks lower. So it's been a quietish kind of session. Volume-wise, of course, you basically have had 1 hour worth of volumes. But as we began by saying, as we opened this program, usually this is in the evenings, market closing, the Muhurat used to happen 6 to 7 or round about there. This is bang in the middle of the afternoon. So that is what is different this time. But it's not been a bad Samvat. It feels it's felt a little slow, but as you heard people like Atul Suri, etc., expecting much better tidings to the market. Atul's, of course, 30,000 on the Nifty. Earlier than a year is what he told us, and he thinks Nifty Bank perhaps does even better. Najib.
Well, Prashant, just one thing. Luckily, that averaging has taken place for the final few minutes, and that's why the Nifty ends in the green.
Positive.
Yeah, so that's, you maintain that winning streak. 7 straight Muhurat tradings we've entered in the green, so this is the 8th. Now just waiting for that to average. Good, yeah. So green on the screen, theek hai. Towards the end, actually what was showing was the final tick, which was 16 points down, but I think some averaging has taken place. So a green start to the new year. Hopefully, it's as good as we think.
Well, we've just heard from Atul, right? He's calling for 30,000 in less than 12 months. He's saying probably earlier than the next time this year we're celebrating Diwali. And of course, so that's on the charts. And as Nigel, as you pointed out, so many other factors seem to be now finally resolving themselves.
And just... Okay, and just I think we have Ashish Chauhan, who Yash is in conversation with, so we'll get to that in just a bit. But guys, just one word of advice, right? Do your homework, study, try to do all the background checks, but after some time you just need to leave it to destiny or to God. Yeah, I'm just talking about, say for silver, for example, it's $50 per ounce. Everyone's been talking about Hindustan Zinc being the biggest beneficiary. 30% of the volume they'll sell in the second half of the year will be at 25% lower than what the price is today.
You were saying
so
$37.
do your homework, and then after that, there's a factor of destiny. So just on a lighter note out there.
I think, but that's point taken, and I think you can't micromanage everything.
Yeah.
Play a little.
Do your best.
Absolutely. Well, let's actually go across to Yash now, who's in conversation with the top boss at National Stock Exchange, the platform on which bulk of the trading in India happens. Ashish Kumar Chauhan. Yash, take it away.
Well, thank you, Prashant. So, of course, the most awaited conversation as far as Samvat is concerned. Ashish Kumar Chauhan, the MD and CEO at the National Stock Exchange. Ashish bhai, first of all, Shubh Samvat to you and all the investors. I want to start this discussion by asking you, has this been a year where your wife has been telling you that I've been a better fund manager than all the brokers, all the asset managers around? And are you sort of preparing yourself for a revenge next year?
First of all, Sal Mubarak, Happy Diwali and Sal Mubarak to all your viewers. It's a new year coming tomorrow. Today is the last day of the Samvat 2081. The new year starts tomorrow. In a way, both me and my wife both are not allowed to invest in stocks. So we invest through the ETFs or mutual funds normally in stocks. But overall, I think it has not been that great a year. Nifty has given 6.5% returns vis-a-vis gold, which has given almost 45%. Silver has given 62%. Even S&P 500 and Nasdaq have given 15 and 25% each. Nikkei has done well.
Correct.
But if you look back, say 5 years, we have Nifty has given 3 great years where we were the best performing markets in the world. And so I think the next year looks much better because of the way the entire year panned out with the tariff war starting and also uncertainty about the US elections and the tariff war and then Operation Sindoor and many other things kind of converged into one single Samvat.
Correct.
And I think now the services exports are booming because of the GST reduction. Consumption is booming. The manufacturing is booming. New investments are coming. The PLI systems are now kicking up. New chips are coming. The one which were established the plans are going to go live in the next Samvat. And so many things are looking good for India going forward.
As you said, this was certainly a year of lot of uncertainty, starting with wars to, of course, wars on ground as well as with respect to economy in terms of trade and tariffs. What is the estimation, understanding and hope, rather, biggest thing, as far as equity as an asset class for the coming Samvat is concerned?
In a way, equities have done well over the last 30 years. And in 30 years, many wars have been fought. Many tariffs have been put in. Many times the IT sort of frameworks have changed across the world. And India has done exceedingly well over all these 30 years, right? And so NSE started on November 3, 1994, which was a Diwali day, right? So it's 31 years complete today on the Hindu calendar.
Correct.
And we have gone ups and downs. The Nifty started on November 3, 1995 basis as 1,000. Today it's 26,000.
Correct.
And if you take the dividends, it would be like 30,000. And so 1,000 rupee invested on the long run with all the
ups and downs
and the dot-com bubble and the global financial crisis and much larger, the COVID and everything else coming up and down, very many wars. But still India has continued its march. And probably next 30, 40, 50 years, India is going to do that on the back of the technology and also the demographics. The India's demographics today is the youngest in the world in terms of the large economies. And that's what is going to keep us
alive and kicking.
Going
Absolutely.
forward.
One question, of course, it's expected to be a special year for investors, but it's also expected to be a special year for NSE. You've applied for your IPO NOC, right? Would you say this is the last Diwali for NSE as an unlisted entity? And the next time we meet you on the day of Diwali, NSE would hopefully be listed?
I have great hopes. Hopefully NOC should come soon, and then 7-8 months we should be able to roll out the IPO. So, I mean, I have great hopes for the next Samvat. Yes,
correct.
IPO.
One another question, of course, the last 2 months have been sort of dominated with so much of noise around whether weekly expiry should stay, should not stay. The brokers, of course, in one voice saying that it should continue and there should be measures which should be taken to safeguard retail investors outside removing weekly expiry. As an exchange for NSE, you've had enough time to see the matter through and through. What is the view that an exchange like NSE, the largest exchange, is for?
No, we have to work with the government, whatever their views are, finally that prevail. And as disciplined soldiers, we try to work with whatever the regulator tells us to do. At the same time, we provide our details. As you know, only 2% of the total registered investors, 12 crore investors, 2% is 25 lakh people trade in derivatives, not 98%.
Correct.
And out of that 2%, only 90% people trade in equities and derivatives both. And people
Correct.
have made huge money in equities, as we know.
Correct.
So only 10% of the 24 lakhs, which is 2.4 lakh people, trade only in derivatives, which are all experts, that
Correct.
are traders, day traders, right? And
Correct.
so effectively, we have not understood where the statistics of people losing money has come from. But whatever the case, we'll have to continue to work with the government and other regulators on this.
Absolutely. So should weekly expiry stay or should it be removed?
For us, if you want to have 2 weekly expiries, you need to have one Nifty and other bank Nifty.
Okay, perfect, of course. One question as far as primary market is concerned. The last 1 month hasn't been, except for a couple of issues, large issues, but it hasn't been a blockbuster, so to say, giving returns on the day of listing and, of course, since then also. How do you see the IPO market for the coming year? Because a large section of retail investors do look at new offers and new investment opportunities there. How do you see the primary market as a pipeline and, of course, the return portfolio?
Indian markets have to grow in terms of the size, but also the variety of papers available, right? Variety of companies available. We were too narrow focused because not many IPOs were coming. Now, last year has seen like 250 odd IPOs. Even this Samvat has seen that, and probably next Samvat will have even more. And that is actually the sign of a growing, fast-growing economy where newer IPOs are coming. And you can see on the other side, contrast, Japan is running 30-year low on the companies listed. Australia is running 30 years low. Even Singapore is running 30 years low. Europe is running 30 years low. Only country which has new companies coming in are all India, a little bit China, but broadly no other markets are getting newer companies because India is growing so fast.
Okay, I think that is the largest unlisted private company in the country, 5 lakh crores in market capitalization, which perhaps is going to make its debut, given everything goes according to plan. Yash, of course, asked Ashish Kumar Chauhan about it, and that's the conversation straight from National Stock Exchange. Devin is still with us. Devin, actually just on that, any recent IPOs, listings, etc., and it so happened, right, you've got many of these. Take Aether as an example, which Nilesh was talking about earlier. It's not very, it doesn't have a very long listed life, didn't do very much for about 3 months after listing, but since August has basically doubled. Any interesting recent listings that you've taken note of, anything you like out there?
Yes, Prashant, I think a couple of companies, I think, which we like. One, of course, I think the recent one which got listed is Jaro Education. I think that company is a distinctly different model. It has basically, I think, an approach of partnership with IITs and IIMs as far as I think their business is concerned. They produce enrollments for them, and that is where probably I think this company is different, and they work in a partnership as far as the fee collection is concerned and sharing of those fees concerned. So it's a very good model, I think, which we like, and I think a cash positive, higher amount of ROC, etc. So definitely, I think we like this company. Second, within the real estate space, we like, I think, which is recently listed again in the month of September, is Lotus Developers. I believe that I think this is one company which is in luxury and ultra-luxury segment with a distinctly high amount of, I think, return on capital employed and with a zero debt, with a sizably large amount of EBITDA margin. And I think a very asset-light model, redevelopment kind of an asset, I think, which they take into account. So we like such kind of niche players who are basically growing on their own strength and probably, I think, giving a larger amount of growth opportunity to investors. Yes, I think you're right. I think sometimes after the listing, you get an opportunity at lower levels. But subsequently, when the market starts realizing the worth of those companies, they start moving up in a right direction. And that's what we look out for, I think, when these companies come into market.
All right, Devin, we'll leave it there. Thank you very much for joining us here on this edition of Mahurat Trading. Really appreciate it. And happy Diwali from all of us here once again. Thank you.
Thank you so much, Prashant. Wish you all happy Diwali.
Okay, well, I think that, guys, gets us to a close on this 1 hour long Mahurat session, Mahurat trading session. Once again, wishing all of our viewers a very, very happy Diwali. Health, wealth, prosperity, and more. And of course, more importantly, time with family.
Family. And thankfully, tomorrow we do have a holiday. It's one of those Diwalis where we have a day off to rejoice, rest, recharge. We'll see you again with the markets bright and early Thursday morning.